You sit alone in the quiet hum of your office. You stare into the glowing monitor. You are building a custom algorithmic strategy to read the market's hidden momentum. The chart is deeply complex. You decide to adjust the layout to clear the visual noise. You isolate the relative strength index, the RSI, moving it down into a brand new window pane at the bottom of your screen to track momentum independently. But a strange visual anomaly occurs. The long-term moving average, that crucial slow-moving blue line, does not stay with the price candles above. It follows the RSI. It drops down into the new pane, anchoring itself to the same coordinate axis as the momentum oscillator. The blue line and the RSI are now tangled in a confined artificial space. It feels like you have uncovered a secret market convergence. But the real truth is far deeper and entirely psychological. You are not looking at a profound macro signal. Are you actually looking at a dangerous cognitive illusion? The financial market is a chaotic ocean of infinite data points. Your brain is a highly evolved pattern recognition machine. It desperately wants to find order in the chaos to ensure your survival. When you look at a financial chart, you are not just reading numbers. You are scanning a visual landscape for threats and opportunities, using the exact same neural pathways your ancestors used to spot a predator hiding in the brush. You rely on visual boundaries to define reality. When a long-term moving average shares a coordinate axis with an oscillator, those boundaries completely collapse. The blue line represents absolute price over a vast stretch of time. The RSI represents short-term relative momentum bound strictly between 0 and 100. They measure entirely different dimensions of reality. Why does forcing them into the same visual pane completely destroy your ability to assess risk? The answer lies in the fundamental architecture of human visual processing. Max Wertheimer, a pioneer of Gestalt psychology, spent his career studying how the human brain organizes visual information. He established the law of proximity. He discovered that when humans see objects placed closely together in a shared space, the brain automatically and involuntarily perceives them as a single unified group. Your visual cortex simply cannot process them independently. When the blue long-term moving average is forced onto the same coordinate axis as the RSI, your brain fuses them into one narrative. You watch the RSI spike rapidly and intersect with the slow blue line. Your brain registers this intersection as a massive, urgent structural event. The sudden crossing triggers a spike in dopamine, but the crossing is completely fake. The lines are only touching because the moving average has been mathematically compressed into the RSI's rigid scale. The data is deeply distorted. How does a simple layout error cause you to execute a catastrophic trade? You must understand the concept of cognitive framing. Nobel laureate Daniel Kahneman and his research partner Amos Tversky revolutionized behavioral finance with the framing effect. They proved that human beings do not make decisions based on raw data. Humans make decisions based entirely on how that data is visually and contextually presented. When the long-term blue line is overlaid on the primary price chart, it acts as a calm, distant horizon. It provides macro context, showing you the slow, undeniable drift of the broader market. It keeps your trading psychology anchored and rational. But the moment that blue line drops into the RSI pane, the framing radically changes. It is no longer an endless horizon. It is now trapped inside a restrictive box. A macro trend is suddenly framed as a micro, bounded variable. Your brain misinterprets the scale. What happens when your brain perceives a slow macro force as a volatile short-term threat? Your survival instincts violently hijack your trading strategy. The amygdala is the ancient alarm system buried deep within your temporal lobe. It is constantly scanning your environment for sudden, unexpected intersections and movements. When the erratic RSI line wildly crisscrosses the distorted blue moving average inside that tiny window pane, your amygdala interprets the visual collision as immediate physical danger. It floods your bloodstream with cortisol. It initiates the fight or flight response. Your heart rate elevates. Your breathing becomes shallow. You stare at the overlapping lines and feel an overwhelming, irrational urge to liquidate your positions or double down on a highly leveraged zero-day option. Your highly sophisticated, custom-coded Pine script strategy has inadvertently created an optical illusion that triggers prehistoric panic. You are reacting to a phantom threat. Are you trading the market, or are you trading your own visual distortions? Consider the principles of information architecture. Edward Tufte, a legendary statistician and pioneer of data visualization, introduced the concept of visual integrity. He argued that graphical excellence requires telling the truth about the data. He coined the term data-ink ratio to explain how every drop of ink on a graphic must serve a pure mathematical purpose. When you force a price-based moving average to share a coordinate axis with a momentum-based oscillator, you commit a severe violation of visual integrity. You create what Tufte would call structural misinformation. The y-axis of the RSI represents a percentage of recent gains versus losses. The y-axis of the blue line represents absolute fiat currency value. By binding them to the same visual grid, the scale of the moving average is violently squashed. A 10% drop in the market might look like a microscopic blip on the price chart. But down in the shared indicator pane, that same drop forces the blue line to plummet dramatically across the 0 to 100 scale. The visual severity of the move is magnified by 1,000%. Why do we willingly subject our minds to this kind of intense graphical manipulation? We do it because we are addicted to the illusion of control. The human brain is deeply uncomfortable with uncertainty. A naked price chart is intimidating, chaotic, and entirely unpredictable. It offers no comfort. It offers no guarantees. To soothe this psychological discomfort, traders layer indicator upon indicator, creating dense webs of intersecting lines, moving averages, Bollinger Bands, and oscillators. We convince ourselves that more data equals more certainty. We believe that if we can just align the RSI, the MACD, and the long-term blue moving average perfectly in one unified window, we will finally unlock the market's hidden code. This is a powerful cognitive bias. It is known as the illusion of validity. We look at the tangled, overlapping lines and mistake visual complexity for predictive accuracy. We feel safe when the chart is full. But cognitive science tells us the exact opposite is true. What is the real cost of this artificial visual safety? The cost is devastating decision fatigue. Your prefrontal cortex is the rational, analytical center of your brain. It is responsible for complex planning, probability assessment, and emotional regulation. It requires massive amounts of metabolic energy to function. When you look at a clean, properly scaled chart, your prefrontal cortex effortlessly processes the information. But when you look at a broken layout, where the long-term blue line is inappropriately trapped on the RSI's coordinate axis, your brain has to perform immense computational gymnastics. It has to constantly, manually untangle the lines. It has to constantly remind itself that the blue line's movement is artificially scaled. This continuous subconscious mental friction drains your cognitive battery at a terrifying rate. Within hours, your prefrontal cortex is completely exhausted. The rational mind shuts down. The primal emotional brain takes absolute control over your trading account. You become entirely reactive. How can a trader survive when their own custom layout is bleeding their cognitive energy dry? You must ruthlessly protect your visual environment. You must understand that every single line, color, and grid you place on your screen directly alters your neurochemistry. The layout of your TradingView workspace is not just an aesthetic choice. It is the literal lens through which your brain interfaces with global macro liquidity. If the lens is warped, your perception of reality is warped. You must separate the variables. You must decouple the indicators. A long-term moving average must live on the absolute scale of price. A momentum oscillator must live in its own isolated ecosystem. When you separate the coordinate axes, you immediately relieve the cognitive burden on your prefrontal cortex. The visual illusion shatters. The false correlations disappear. The market stops looking like a frantic, overlapping collision of lines and returns to being a calm, readable landscape. You reclaim your analytical clarity. Can you see how simple geometry influences human panic? The next time you build a custom strategy, you must question the architecture. You must look closely at the coordinate axes. You must recognize that your brain will instinctively try to find a narrative where the lines intersect, even if that intersection is a mathematical impossibility. You must become a defensive architect of your own psychology. You must defend your mind against false visual urgency. The market is already designed to exploit your deepest evolutionary fears. It is designed to trigger your loss aversion and your dopamine cravings. You do not need to help the market defeat you by confusing your own visual cortex. You must strip away the noise. You must correct the layout. You must ensure the blue line tracks the price, not the momentum scale. You sit alone in the quiet hum of your office. You stare into the glowing monitor. You open the settings of your custom script. You isolate the RSI. You unbind the long-term blue moving average, returning it to its rightful place on the primary price axis. The lines separate. The chart breathes. The illusion fades away. You are finally seeing the market exactly as it is.